Hi everyone, today let's talk about the Apple lawsuit. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So yesterday in the charts we talked about Apple falling after hours, and that was because the DOJ was launching a lawsuit saying that they have some monopolistic characteristics related to their iPhone and their ecosystem. This is not new here for Apple, but it seems like Apple is reacting more to this lawsuit than they have in the past. And the DOJ is claiming that the iPhone is a monopoly ecosystem that drove the astronomical valuation for the iPhone maker, and that is at the expense of the customer. I don't think this is very new, and I really don't think that this is going to go anywhere until we get some more details. Maybe they have some more evidence that I am not aware of, but at least from what I could find researching for this video, there really was nothing new to this, and Apple actually has kind of yielded some of its powers within the Apple Store, allowing certain apps to have workarounds so that they don't have to pay the Apple cut to be in the Apple Store, or at least a less of a cut versus the higher percentages, versus the very high percentages that they charge to be in there. And I think this is kind of a questionable argument. If they want an Apple Store, or if they want something that is like the Apple Store but not the Apple Store, then they're going to have to build one themselves, and then they can control their own ecosystem. But if they want to access the Apple market, which was built by Apple, I think Apple has the right to profit from that ecosystem, at least to some degree. I guess the argument here is that they are making too much money without the ability to compete within that space. And then they say Apple's made a lot of money across all of its different services, and that the Supreme Court defines a monopoly as the power to control prices. And I think it's a pretty tough argument to say that Apple controls the smartphone market. There are a lot of competitors, and I personally don't use Apple phones. I know iPhones are very popular, but I think they're going to have a tough time with this. There's a lot of other phone makers that have success, and there's a whole Android ecosystem. You could argue maybe it's a duopoly where there's two big brokers, but right now I just don't see it. It's also worth noting that Apple was fined $2 billion in the EU in its dispute with Spotify. So like I said, Apple's been under the gun for a while, and I don't think this is anything crazy, but it is interesting to see that Apple was down about 4.5% on the day as a result of these allegations. Moving over to fear and greed, you can see we're back into extreme greed with the pop that we had yesterday and then the follow through we had here today. Extreme greed still in strength, breadth still hovering, put call ratio still hovering, volatility moved lower yesterday, basically flat here today, and then bonds across the market all in extreme greed here. Moving over to seasonality, you can see the 21st here, expected to be basically flat, if not slightly higher. You can see the NASDAQ was expected to be higher, and it was a little bit. Even on the election year data, you can see slight rallies here until we get into the 26th, which would be Tuesday of next week. We'll see if we get a little bit of a double dip there and then a rally into the end of the month. But right now, we're holding steady, if not slightly bullish. Moving over to the economic data, there was really nothing in here that moved markets a whole lot. You can see U.S. global manufacturing PMI higher than expectations, services PMI lower than expectations, but existing home sales better than expectations, so a little bit mixed. It's actually kind of good to see services pulling back a little bit. That's where we were seeing the most inflation, and overall the data here was good. And then looking at 10-year tips out below 2%, a little bit higher than the previous read, but still quite low. So inflation expectations are still low for that time period. And then Fed balance sheet here rolled off quite a lot, just short of $30 billion, pretty substantial roll off. We'll see if that trend continues. Jay Powell did mention yesterday that they were going to start slowing the rate of the Fed balance sheet roll off, but they're still targeting that same level. So we'll see how that plays out over the coming months, but this was a pretty substantial roll off for this week. Moving over to max pain, you can see 515 is currently max pain. That's about $7 lower from current levels. You can see 515, 520, and 525 all have tons of calls at that level. We'll see if we dip closer to the bottom of the calls. That's where we finished last week, which was quite bearish. And then we had the catalyst of the FOMC, so I'm not sure if that applies for this week. Right now, everything still looks pretty bullish, but understand that it could dip below that 515 level, or at least closer to it for tomorrow's session. Moving over to the charts, we didn't see anything crazy here today. So the rally was super aggressive yesterday, basically continued here into the mid-session, dipped a little bit, still holding that 21 EMA on the hourly at 521.95. If that breaks, we could see a substantial move to the 55 at 517. Momentum slightly bearish. Did see a little bit of selling at the end of the session, and it's below VWAP as well as the 21 EMA, but looking at the daily chart, you can see it does look very powerful with the breakout yesterday, and the price target right now is up around 531.50 or so at the trend line. I do also want to add a trend line there at 517.12 right at the top of that consolidation. Seems to be a powerful level, and you can see it's right there at that 55 EMA as well. So maybe we see a slight dip into that level and then a rally, but right now everything still looks bullish, just a slight pullback at the end of the session. Moving over to the Tasty charts, you can see that same setup, rallied up here, ran out of momentum at the ATR band, and then pulled back into the middle of the range. Middle of the range right now, 521.50. Maybe a little higher here, 522. Not a ton of volume, momentum not showing much of anything, so just looks like we were a little bit extended and pulling back into the middle of the range. And then looking at the 4-hour chart, you can see that same setup over through that top ATR band, 8 EMA sitting at 520.78. You can see that a little bit better here, kind of like a doji. Momentum starting to fade a little bit on the MACD. And then looking at the daily chart, you can see momentum on the MACD, on the volume weighted MACD here is a little bit weak. Got above that second ATR band, but the third one is currently trading at 526.44. I just can't imagine we're going to get above that tomorrow, so that would be your upper limit, about 0.5 to 0.75% as a potential area. And you can see that trailing stop stepped up here today at 505.90. Moving over to the NASDAQ, similar thesis, big rally yesterday, continued pre-market, and then into the open, pulled back, actually took out this trend line here just a little bit after hours. Momentum bearish, RSI showing a little bit of weakness on the hourly chart, but still very positive on the day, 0.47 to the upside, momentum rolling to bullish, RSI looks bullish on the daily chart. Once we broke this trend line yesterday and then started that push, I assumed that we were going to go higher. We did get below 446.66, which was interesting, and we are still below it, but we're rallying a little bit after hours. See if we can hold that 21 EMA. If it can, the trend line is up around 457.50 or so, which would give you another $10 of potential upside to that level, so it looks very good, just showing a little bit of short-term weakness in my opinion. Moving over to the Tasty charts, you can see that same thesis, gapped up, fell a little bit. ATR stops well below current price, 427.60, above all the EMAs and SMAs, right at that first ATR band, which is 445.75, right there at that level. 451.86 is the next ATR band. And then looking at that 4-hour chart, you can see we overthrew it here, pulled back into the middle, just like we saw on the SPY. Momentum bullish. RVOL did perk up a little bit, but nothing convincing. And then looking at that hourly chart, you can see overthrew it massive. Should have expected some sideways chop, which is what we did get. Ended up pulling back to that ATR stop on the hourly chart, 445.45. Momentum is rolling back towards bullish here on the volume weighted MACD, however, so I would expect this to push higher tomorrow. Moving over to the Russell and the Dow, both of these had a very similar move here. You can see the Russell continues that swing up, momentum bullish, RSI clearly bullish, 0.89 to the upside, did find some resistance at 208.22, pulled back from that level a little bit, but I would expect it to break higher here. You can see that momentum continuing to look very clean there. And then looking at the Dow a little bit further in that momentum swing, we saw bullish momentum yesterday, got the follow through here today, 0.7, overthrew that next trend line, and then there's really nothing up here. Who knows where this is going to go? Continues in price discovery to the upside. You could maybe make an argument for this trend line up at 409, but that's a long way away from current price. Maybe we're looking for that overbought condition, only at 68.62 right now, so it would go a little bit higher to hit overbought conditions, and then we'll see. But right now, this looks super bullish. Might look for some structure on this later. Clear breakout with no major levels of resistance. Moving over to the Dow on the Tasty charts, I just wanted to highlight that third ATR band currently sitting at 399.59. That would be your resistance, and you can see those ATRs are starting to trend higher a little bit. The ATR stops are trending higher a little bit, so everything still looks like we're going higher. You can see volume weighted MACD looks bullish, and we did see some RVOL spikes on those two candles, so everything looks good. And then looking at the 4-hour chart, just be aware, you can see how extended we are. Obviously, it's on a very strong catalyst, but that doesn't mean we can't see some pullbacks, at least to the 8 EMA at 395.69. Moving over to the MAG 7, you can see it was up very slightly, 0.24. Volume stepped up on that selling, so you can see it here. Momentum flipped early in the session, volume coming through at the end. And And even on that first candle of the day here, you can see lots of selling volume. So my guess is that's coming from the Apple side in the Mag 7. So that's definitely moving markets to the downside, maybe a little bit artificially. Everything else seemed to be doing fine, but Apple was the laggard of the Mag 7 here today. But you can see we're below the short-term EMAs as well as VWAP. Momentum slightly bearish, but obviously on the daily structure, nothing has changed here. Still looks very good above all the EMAs and SMAs, still holding well above support. Pretty clean breakout yesterday. It wasn't all-time highs, but you can see this clear consolidation. 357.80 would be that level, and we broke that yesterday, and we're holding still above it here today, even with the Apple weakness. Speaking of Apple, let's look at Apple and Tesla. Look at that massive red bar. It had looked very strong. We saw some selling in the after hours yesterday, and that followed through very powerfully here today. 4.09 to the downside. And I think this really has more to do with the fact that Apple really just doesn't have anything catalyzing it to the upside, so any kind of negative news seems to be blown out of proportion a little bit. We've been talking about how Apple has looked weak over the past several months. It started to hold some levels and look bullish, but then you can see those candles yesterday after hours, tried to rally in the morning, fell immediately. Nothing good happening there. Obviously, very much still a downtrend, and if this 170.90 level breaks, that 165.70 level seems like it could be in play, and that is the low here from October of 23. If that breaks, there is a lot of downside room. You can see some levels here in this previous, right around that 161 area, but really nothing major in support. You can see that previous run was pretty straight through this zone. And zooming out here on Apple a little bit, you can see that volume profile, super critical right here. Tons and tons of volume, and then there's really a drop off through this previous zone here, and then you would see some support in that 155 area in this previous consolidation. Let's zoom out, see if we can get a better profile. Yep, right there. So you can see definitely some volume in this zone, volume right where we are, and it's going to move pretty quickly through that area if this breaks down, in my opinion. And then moving over to Tesla, much less exciting, still down 1.62%, still very much a downtrend, still looking at this as a move down, bear flag, breakdown. It's been a little bit choppy on this sell, had some upside moves, momentum still bullish, RSI looks weak here. 177.70 was the resistance, we hit that level. It's holding the 9 EMA at 171.61. If that breaks down, you have 167.34 and then 153.43 below that. So we'll see if this continues tomorrow. Engulf the previous candle, does look a little bit bearish. Moving over to Microsoft and NVIDIA, both of these were up pretty nicely on the day. Microsoft continues to break to new highs. This was a new all-time high here for them, and it's even up after hours. So it looks very good. It was a doji, but it can absolutely continue from there. Momentum and RSI still very bullish. And then NVIDIA also positive on the day. Got a step towards bullish momentum, so that's good. Trend resistance still around that 950, 949 area. We'll see if it can get through there. Done it once, got up to this upper trend. That would be over 1,000 here for NVIDIA. And it's actually down a little bit after hours. Let's see what that looks like. Actually had kind of a double top here in the pre-market, tested it mid-session and then broke down, holding that 21 EMA here on the hourly. That's at 911.67. Momentum bearish, RSI breaking down here today. So we'll see what happens. If this area breaks, you got the 200 sitting down at 892.14. Moving over to Broadcom and LULU. Broadcom had a very strong day, 5.64%, and it's up even more after hours. You can see volume ramping, momentum ramping. Looks like Broadcom is set to make new all-time highs here pretty shortly. Everything you would want to see to the bull side looks very good there. And then looking at LULU, let's go full screen on this one because it is a dumpster fire. This stock has been on a really powerful run. You can see here October lows ran all the way up to the 515 area from around 350. Very powerful. You can see that earnings announcement, very strong, and it was strong through here as well. And now we were starting to ramp and it looked good, clear breakouts, good volume. And then we had earnings here today and they are falling incredibly hard after hours. And this is kind of the nature of LULU. It is a very volatile stock, down over 10% after hours, especially with that ramp in. It definitely looked like it was grabbing some liquidity. And then right into that 482 area, right at these previous highs, started to wick that resistance and then broke down massive through my level at 436 and then my next level here all the way down at 380. You could probably make an argument here. Let's go ahead and add one, put that right there at this pivot point. That would be 415. So we'll see how that plays out. But right now, LULU cratering after hours, and it seems like it's set to go lower. Moving over to staples and discretionaries. Staples up 0.05, still holding the trend, still intact. And then discretionaries 0.58 to the upside, momentum rolling to bullish. RSI looks clean. Almost hit the level 185.36. Definitely touched these levels here from the previous wick high. I would expect it to break to this trend line at this point at 187.40 or so. And then my next level to the upside, 189.38. Everything still looks like it's in an upswing. Even staples continues to roll to bullish, and the RSI is above the SMA just by a little bit. Moving over to oil and gas and energy, both of these continued their run here today. Still looking at 154.13 for oil and gas. Energy hit the level here in 92.80. Pulled back a little bit from that level, and it is falling a little bit after hours. Technically, it missed it by a penny. High of the day was 92.78. I'm going to call that a touch. And then you can see momentum starting to fade a little bit. Still super overbought. I think the market dynamics still say that energy is going to go higher, but eventually we will see at least a short-term pullback. The question is when. Is this resistance going to hold? If it doesn't, 94.64 is the next level. Moving over to breadth, we are continuing to see that upswing momentum here on the 20 rolling higher, movement higher on the charts. 86.50 is the next level. See if we can get up into that 90 range. And then similarly here on the 50-day breadth, continued higher, broke the level, next level 83.83. Momentum bullish, RSI bullish, so breadth widening as markets go higher. Moving over to 200-day breadth here just for a moment, you can see we've been on that same 3-day upswing, momentum and RSI still bullish. It is worth noting, however, we do have a little bit of divergence. So you can see this previous high, we're right at that same level. The RSI there was at 66.03. Current RSI is 62. So we have a little bit of divergence. Same price level, lower RSI. We'll see if it can break that and continue higher up into that 90 range. If we get there, that's really going to be a big indicator that markets have kind of topped. You can see anytime we get into the zone, there are definitely pullbacks. It can take a while to happen. You can see we hit this level in December of 20, and then we did see some short-term pullbacks, but we didn't see anything major until July, August of 21, and then that was a substantial move lower. So we'll keep an eye on that. Right now, it still looks like we're headed into that range. Moving over to yields, we did see a slight bounce in the 2-year, which was interesting. Momentum is still bearish here, and it is bouncing a little bit on that Friday candle as well, so that's kind of interesting. Holding a higher low. See if it can continue that rally. I wouldn't expect it to. I think we're probably going to start to chop in this range. I think we've priced in the Fed at this point. I talked about that a little bit yesterday. Everything for yield seems like it's set in. And then the 10-year still trending lower, throwing some wicks to that level. Again, I think we're kind of locked in. Nothing really moving yields around too much, which could give equities an opportunity for more upside. Moving over to the dollar, big reversal here today. Very interesting. We saw a big downswing on the FOMC yesterday, and we did get a slight continuation, but look at this move higher on the dollar, up 0.6, momentum bullish. We saw the downswing yesterday. I thought that that might be kind of the culmination of this short-term rally, but it seems like the dollar has some more legs in it, so that's interesting. And it's very close to the high. Looks like it's going to close here in 45 minutes. We'll see if that dollar holds that level or if it starts to sell off a little bit. I would expect it to hold, but this RSI looks very clean. Again, momentum looks clean. If the dollar starts to break higher, that could be a little bit bearish for markets, so something to watch. You got the 144 EMA at 104.22, and then my level there at 104.4. Moving over to bonds, J&K continued its rally for a little bit, hit the resistance. We'll see what happens now. Last time we've touched it 3 times here and then broke down. We'll see if that happens again. Does look a little bit better this time with some higher lows. Last couple times we just hit that level and then bounced kind of into the mid-range. So this still looks a little bit bullish, momentum bullish, RSI bullish. Just hitting that level and finding some resistance. See if it can continue higher tomorrow. And then TLT slightly positive. Seems like that 92.82 level is holding. Momentum rolling to bullish. We're right at the trend line as well. We'll see if that plays out. But right now, everything looks pretty bullish. And as long as 92.82 holds, this should go higher. Moving over to volatility, you can see both of these continue to crater here. VIX got all the way down to that 12.5 area. I think it'll be interesting to see what happens now. So we got into this range and we did chop in the zone for many days in a row. You can see we got here in mid-November. We didn't really see any major breakouts until mid-December, so that could be about 30 days of price action in this range. Then we had a pretty long period of kind of choppy higher levels on the VIX, and now we're back into a much, much lower level. Seems like we are going to consolidate at this point for a little bit. I'll continue to watch it. Technically, it did hold this trend line, but big wick low, and we'll see what it does tomorrow. Moving over to my accounts, you can see I did not make money, which is very disappointing. If I had rolled out my calls yesterday like I was supposed to, I definitely would have made money. Unfortunately, I did not, which is quite upsetting. But otherwise, in terms of positions I have now, I did roll out to 205 here on that IWM, and that is already in a losing position. Puts my max profit at 207. We'll see if this pulls back at all tomorrow. Probably not. It's up a little bit after hours. So I'm trying to slow roll this a little bit so I'm not paying too much debits. I also don't want a long dated call. I'm just going to roll it up each day as needed. That way, if we get a downswing, I can still capitalize on that. And then looking at the Qs, I did sell some puts here today. The markets fell a little bit, as we saw on the charts in the mid-session. So I did roll that for a day and down a little bit to 448 for $2.50. For tomorrow, we'll see how that plays out. I may or may not accept those shares, or I might roll them out again. The NASDAQ is actually up a little bit after hours, so if I collect that, that would be fine. That would be $500 collected. And then looking at the poor man's covered call, rolled this out to Monday for 444. Did take a little bit of a longer dated position on that. It is $5 at 444, so the max profit there would be 449.19 for the Monday session. I think that's probably a little bit optimistic, and you can see it did come in a little bit already. So paid a little bit to do it, but I think that's a better position. Gives me some opportunity to the upside while still giving me some decent protection in the money there. So we'll see how that plays out. Again, trying to slow roll these and not pay so much in debits as the market rallies super aggressive. Let me know down in the comments section what you think of the Apple lawsuit. Will it go through? Will it actually affect the company? Or is it just giving us a decent buying opportunity? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.